Well, welcome to the next video in the Trading Mastery Training. In this video, we'll cover the top trade journal questions you should answer. Now, if you haven't watched the previous video where I discussed the foundation of keeping a trades and a trading journal and why it's critical, you'll definitely want to watch that. This video will focus on the fundamental questions that you should have and that you should be asking within your trading journals. First up, before we jump in, you can pause this and read this disclaimer. The biggest thing is I'm not a financial advisor and nothing I say should be taken as financial advice. So you can definitely pause that and read that. But let's jump in, and we're going to jump in with just a quick recap. What is a trade journal? We talked about this in the last video. We went into detail. A trade journal is a journal of everything you can possibly capture that will help you track your analysis, thinking, feelings, and the outcome of the trades you do. You want to capture every data point that you think that would help you measure your edge on the market. Remember in the last video I talked about how important it is to measure and how that is really the deciding factor on you becoming a successful trader. I've said this many times throughout the training that trading is not about the market. Trading is about understanding yourself and having the ability to create an edge over the market. The market is there every single day, and it will always be there. And what really separates you from becoming a successful trader is your ability to develop your own edge on the market that is unique to you, that is unique to your temperament. And throughout this training, I've shared foundational stuff that will get you there in the quickest time possible. I've really taught you how to fish, and I continue to do that through the training. But one of the things that I can't do is I'm not there every single day with you. And having a trade journal is really the key. And I know this is a recap of the last video, but a trade journal is the fastest way to grow as a trader. And I'm going to re-emphasize this point again. If you are not keeping a trade journal and a trading journal, both of those, I covered the distinction in the last video. If you're not keeping those, you need to start immediately. You need to keep a detailed and honest trade journal. That is the quickest way to grow as a trader. It's also the quickest way to actually ensure that you're getting the most from the training that you're going through here. Because as you learn a new concept, as you learn something such as inflection points or market structure or maybe even price action reading or value channels, your ability to digest that into a trade journal and to regurgitate that back to yourself will help you ensure that you're digesting that information and that you're putting it into your trade system. I know this is a recap of the last video, but I just wanted to re-emphasize this point. And the final thing is you want to keep a detailed and honest trade journal. Once again, detailed and honest, and study it religiously. A trade journal isn't just for the time that you're actually journaling and you're putting it together. A trade journal is for you to go back and to relive your contact with the market, to relive the decision process, to re-emphasize and basically build up your edge that you have on the market. So let's move on and let's talk about the questions. I'll first give some general tips, which is in all these questions or all your journals, the two main trade journals that you want to keep, you want to track detailed scenarios. You want to be as detailed as possible. Now, how you track that and how you go about that, it could be bullet points, it could be full sentences, it could be a full story of an overall trade. But that's what you want to do. You want to track detailed scenarios. And I've mentioned this before in the training, and I'll mention a lot more here in this section, which is the whole story of your trades. You want to be able to get to the point where you can tell a story of price action. You can tell a story of the trade and how it unfolded. You could tell a story of the interaction between buyers and sellers. and how that correlates to the charting patterns that you're using, maybe indicators and price action and volume and everything else. If you can tell the story of a trade and price, you will have such an edge on the market. That's where journaling really comes in. The other thing that you want to do is you want to make all this future-proof, meaning you don't want to start using acronyms and then stop using them, and then in a month you don't know what they were. So if you abbreviate certain things, you want to make sure that you know what that is, or you keep a dictionary that tells you what those abbreviations are, or just make sure that you are going to remember those. Because one of the valuable things, and I mentioned this previously, is going back to your trade journal. I go back to journals years ago where I look at it and I can see my growth, but I also notice new things. If you've ever read a book a couple times, one of your favorite books, and there's books like that, or even movies, if you watch them multiple times, such as The Godfather, for instance. Great movie. And if you watch it multiple times, you just see the layers to the movie. So it's the same thing with your trade journal. You want to be able to go through it. Remember, I said these things don't sit on the shelf. You're picking these things up. You're going back to it, and you're looking at it. So the general tips here for all the questions and everything else is make sure it's future-proof. Make sure that you can go to it in the future. Now, reiterate what I said before. Keep two journals, a trades journal and a trading journal. In the previous video, we went into the distinction and really went into depth what both of those are and how both of those help you grow tremendously as a trader. So just keep that in mind. Some of these questions will be in your trades journal and some of these questions will be in your trading journal. Which ones you want to put is really up to you. It's really up to your style. So the first section of questions that should be in any trading and trades journal, and what I'm going to say going forward is when I say trade journal, it's going to cover both of those. You decide where you want to answer these questions and at what point in time. Maybe for your individual trades, you might want to have emotional or psychological questions for each one of those. Or maybe this is more of your daily trading journal. So where you put these questions, where you answer these questions will be unique to you. These are just the top questions. So the first question that should be in a trading journal is, what has your day been like? Oftentimes, understanding, and this is a big thing, remember the markets or trading is about you and your reaction to the market. Let's say that you got up early and you had a little bit of an argument with a significant other. And let's say that just kind of set your whole day off. You really want to capture that. And you want to capture, the first thing you want to capture is, has your day been positive or has it been negative? And this is going to sound, it's one of those things where if you're not bought into this, it's going to sound weird, but you have to be able to declutter your mind. And you have to be able to recognize when your mind was cluttered or when you were distracted, and figure out a way that no matter what happened previous to you sitting down and looking to pull capital from the market, that you have cleared your mind and you're thinking clearly and you're thinking straight and the other distractions have gone away. You compartmentalized your thinking. The only way that you really know that, though, is if in your trade journal you put, well, I had an argument, and then you notice the last 6 trades that you did, the 6 trades that you did that day, all of them you did not follow your trade system, or you messed up various things. Maybe you read the market wrong. Understanding that your day started off wrong and started off in an off keel will help you see that trend. For me, I'll just share this personally. I noticed that when I got up early and I walked the dogs and didn't do anything, didn't have any music, didn't have anything in my ear, just went out and walked the dogs in the morning before I did anything, and then followed a regime, my trading day was much more successful. When I started doing that more and more, and then when I noticed that in my trade journal, I just started making that part of my routine. How are you feeling? I know this is completely contrary to the logical aspect of what we talk about in trading. What do you mean, how am I feeling? Well, one of the key things, this is a lot of interesting ways to look at trading, but a lot of times, sometimes when you enter a trade, if there's just like something in your gut. I can't remember the trader. It's one of the well-known traders. He would do a trade. I think it was George Soros. And basically, if his lower back had some kind of pain, he would get out of his position. So his body was telling him something. These cues, these subconscious aspects, you want to try to capture these. You want to try to understand these, because a lot of times these are part of your edge. It's not talked a lot about in trading, but any successful trader I know, they have these little tics. They've developed these, and they've learned to listen to them or not listen to them. So that's the other thing. You really want to understand, was your head clear? So in a trade, every trade you do, you want to understand, was your head clear? Were you distracted? Was the market going crazy? This is a good example of when your head might be clear. Have you ever been in, or have you ever seen 6 or 7 things really move? I'm saying in crypto, let's say 30 to 60%. Things are moving, and the 3 or 4 things that maybe you entered, they're going down or they're not doing anything. And then other things start to move. When you're in that state and then you're looking at a setup, is your head clear? Was your head clear, or were you thinking about, well, this is a opportunity, or this is a good trade, but your head wasn't completely clear because you were jaded with the fact that there was things moving that you weren't in, so you felt like you were missing out, and the things that you were in weren't doing well or were actually declining, and that clouded your next decision. So capturing that, saying in your trade journal, my head was completely clear, or I was a little distracted because I woke up and I noticed that a couple of things had moved 30 to 50%, and it was none of the things that I had chose the previous day. Something like that, just capturing that stuff. Did you get enough sleep? So you want to capture if you got enough sleep, if you feel well rested. Maybe you'll notice a trend is that when you toss and turn the night before, you should limit your position size. I know a trader that he does that. So he's a day trader, and he trades equities and the currencies. And if he doesn't get enough sleep, and he knows that, what he'll do is he won't trade his full position size until he's shown that that hasn't affected his trading or his thinking. He noticed when he doesn't get a good night's sleep, there's something going on, doesn't know what it is, but then he reduces his position size, so he reduces his risk. He only knew that from actually just paying attention, journaling it, and understanding and saying, when I wake up various times throughout the night and don't have a full night of sleep, my trading suffers the next day. Are you confident on your trade? This is a big one to capture. On every trade you do, you should put a confidence level. Like, how confident are you? Now, usually, if you've gone through the training here and you've developed your own trading system, then you should be pretty confident. Because why? Well, you're following your trading system. So if you've developed a trading system that you believe in and that you feel gives you an edge, then when you do a trade, you should be fairly confident, because you wouldn't be doing a trade otherwise. But what you'll notice is that sometimes you do deviate from that just because trading is messy, just like life. So understanding your confidence level of a trade is really important, and capturing that. And you can grade it similar to the other way that I suggest that you grade your number one thing and other things. But you can say, I'm very confident, not confident. I'm a lot of times we say in trading, you shouldn't try to have an emotion one way or another, but you should have a conviction rate. So capturing that is important. You might notice every time that you're very confident about a trade, it goes against you. So maybe that's something to look into. Maybe then throughout the other questions that you'll see here, you'll start to drill down and understand, well, what's making me confident? And then how do I adjust and change that? The other thing that you want to do is capture rituals that work or don't. So I mentioned previous trader I know that doesn't sleep well, so that's his ritual. I mentioned that if I get up and walk the dogs and I clear my head, I have a couple other things that I do before I sit down and trade the markets that I've developed. I didn't used to do it as much, but now it's a ritual. And I capture these rituals, and when I don't do these rituals, I just feel off, or I'm not thinking exactly clearly. So a lot of times too, I used to, and I'll just share this personally, the first trade of my day when I was scalping, especially in the Forex markets, I would be a losing trade. So every first trade that I do a day nowadays is typically a really reduced size position. And then as I gain more confidence of reading the market right, and that I get a feel for how price action and price is revealing itself and structure is unfolding, then I will trade at normal position sizes with still my risk reward. But that's a ritual that I developed. The other thing is capture anything unusual. So this goes in your trade journal. Anything that's unusual. It could, and this is going to sound odd. We're going to get to some more of the not the technical questions, but more of the non-woo-woo questions, I guess you could say, here in a second. But you want to capture anything unusual. So I don't know, maybe you noticed it was a full moon the night before. Maybe you just noticed when you step outside and it's a full moon that the next day you trade differently. People are strange. We're all strange in our unique ways. So remember, I said a trade journal is for you. If you have a mentor, then you maybe might share it with your mentor, but it's for you. So you should be honest with yourself. You should be honest with your trade journal. And sometimes you don't know what things might happen in your life that might reveal a big opportunity for you to develop an edge on the market. I never discount anything, because if it works, it works. It really comes down to, can you successfully and reliably pull capital from the market? And does following this ritual or this unusual thing you do allow you to do that? You say yes, and you can consistently and reliably do it. Who am I to argue? So those are the key questions you want to cover on the emotional psychological. And I would suggest most of these you're covering in your trading journal. Some of these you are covering in your individual trade journal, where you do want to cover this stuff. But every single trade you do for a day, you don't typically need to say, I didn't get enough sleep. That's good enough for your overall trading journal, either your begin day or end of day if you're doing both. So let's get into more of the foundational stuff that you want to cover in your trade journal. So the question you really want to understand is market condition. So when we talk about market condition, is what is the overall market condition? So if we talk about cryptos for a second, cryptocurrencies, you wake up someday and you notice everything's green and there's an exuberance in the market. And maybe it's coming off a 7 to 10 day retracement or low, and Bitcoin has been declining, and then suddenly it makes a move up. Well, you want to capture that. You want to capture the overall market condition. So you want to be able to get a good feel of the overall market condition. So just capturing that, you want to capture that in your trades and your trading journal. And you also want to sometimes even predict how long will this market condition last. Based on what I see here, I could see this market condition lasting for half a day or for the next 2 or 3 days, given how things are unfolding. So you really want to capture what's the overall market condition. What's the condition of the traded instrument? So the market has a condition. It's bullish or bearish. But then what you're trading has a not a psychology, but has a personality to it. But what's the condition of that? Is it bullish? Is it bearish? Where has it been? Is it skittish? Is it obvious that there's no buyers stepping up? Is it obvious that every run is being stuffed by sellers because they have no confidence that there's an upside? In cryptocurrencies, there's not a lot of short selling. There's starting to be more and more. But where is the liquidity lying? And is there liquidity pools in in the traded instrument. And what does that tell you with the condition of that? Meaning is that does there appear to be a lot more short sellers? So this is remember, when you're doing your trade journals, you're going down a series of listed questions. And this is going to seem like a lot. I know this is probably going to be about an hour-long presentation video, but these questions are easy to answer. I can tell you today, the market condition has been slight bullish. A lot of things. I woke up today and I saw one thing was up 100% when I looked at it. So when I sat down, something was up 100%. It's since scaled back 50%, but there was a couple other things that were 30 or 40. And then the market started catching up. So the market condition today was overall bullish and was a slight bullish bent. Some things were super exuberant. The things that I traded, I was looking for opportunities, the things that had pulled back, that had a condition of support, that were at inflection points, because the market condition was continuing to be bullish, and that can be infectious. So that's what I put in my trade journal. Bias, bull long or bear short. And I cover this a lot in the training. Whenever you're trading something, you should have a bias. You should either have a bull bias or a bear bias. And you should also have a strength of the bias. Is it strong or weak? Before you trade anything, you should be able to answer, and this should be in your trades journal. I went into this trade, I had a bull bias, and it was a strong bull bias because of XXX, whatever it is, whatever the things that you're, well, there's various things that you would cover. We cover that a lot in the training. Moving averages, price action, volume reading, inflection points, structure, value channels, all that is going to play into bias and the strength of the bias. So that's all key. So capturing that is what you want to capture. In crypto, you want to capture every single trade. What is Bitcoin doing and where has it been? Every single trade. So this is just a habit you should get into in crypto trading. When you do a trade and you're journaling it, you should say, well, Bitcoin has been trading in a range for the last 7 days, and there's no clear direction, but it's stable, and that stability has allowed the alt market to actually be bullish. But there's more of a protection to the downside, and it was tested earlier today before I entered this trade. See, I know these questions, they sound like a lot. They only sound like a lot because I'm explaining them, but when you're answering them, they're very quick, and you're able to answer them in your trade journal, but they help you tremendously because you're like I said in the previous video, I don't want to rehash everything, but you're basically going through your trade system every time you're journaling. And then when you're answering these questions, you're thinking through your trades. You're becoming such a much better trader in the quickest time possible by doing this. So let's move on to the trade details. So a lot of those questions were about the market generally, and you want to capture those on your individual trades. But now these questions are going to be focused on just the trade. So most of these questions are going to go in your trade journal. So each trade that you do, you'll capture these questions, and you'll want to ask these questions and answer them. So the first one is, how did you become aware of this trade? That's a big one. This is maybe you're in this really cool Discord group where this guy has a dog, right? Has a white dog. And he mentions trades, and that happens to be one of the ways that you find trades. You go in there and do your technical analysis, and you just notice that every trade that he mentions in his Discord group, they seem to do very well. And I'm guessing if you're in my group, hopefully that's happened to you quite a few times. You've gone in there, seen a trade that I mentioned that I entered, gone in there, done your own TA, and it looked like a good setup, and you traded it. And that would be something you want to capture in your trade journal, which is in this Discord group, when he mentions a trade and I do my own technical analysis, those seem to do well for me. Or maybe they're not your style of trading. Another example is just how you become aware of a trade. So I scan the market every day. And one of the things that I do that I find good trades on is I will sort on the movement, the percent of movement in the last 24 hours. And I will sort negative movements. So not positive movements. I'm usually getting exits on things that have moved on the positive side. So I will check that. But then what I'll do is I'll see what are the things that have retraced maybe 12 to 20%. Or, and this is another way that I found this through journaling, that when I would pick things that were in the middle, like between 10 and 3%, when I started my trading day, when I actually sorted that way, I found some good trade setups for some intraday swing trades. So daily swing trades, I found some good setups. So things that were just starting to move when I started my day, and I found some good swing setups. I only really figured that out in detail by really signifying how I became aware of my trades. So capturing, is it a scanner? Is it a group? Is it you scanning the market? Is it you waking up and doing technical analysis, or you starting your trading day and doing technical analysis? How did you become aware of the trade? Capturing that is critical. And the other piece of advice I'd give on that is try to come up with a standard way that you would describe that, which is a scanner. And don't just say a scanner. You want to say the specific scanner, and then that the functionality or how you got to use that scanner. So my example, what I gave, where I'd sort the market based on the percentage move in the last 24 hours, mine would be, it would be sorting percentage moves negatively and then finding the mid-range. So I wouldn't pick the ones that have moved the most. I would find something that hasn't moved green but was in the red. So I described it that way. And by doing that, I noticed that consistently the trades that I was doing, because it's not just enough to say that, hey, this is how I became aware of the trade. It was, I had the full trade journal, so I knew the outcome. And I noticed on most of the outcomes, when I look back and say, how did I discover this trade? I discovered it through this method. And then I used my other technical analysis and other things to verify and confirm that it was a good trade setup. The other thing that you want to keep is screenshots. In the following videos, I will share live trade journals, and I'll share solutions to actually trade journals. So you'll see how that unfolds. But a picture is worth 1,000 words, and screenshots is key. I also shared in the previous video that I like to print things out. So I print out trades, especially when I'm trading a new market. I'll just print out trade after trade after trade, and then when I check up after that trade. So screenshots is helpful, because then you can visually go back at that point in time with no other distraction and see the actual chart from that perspective at that given time. Of course, you want to capture the type of trade. So is it a swing, scalp, long term? A lot of these things I think will be common sense that you should have in your trade journal, but I just want to include it for completeness. Trend. So in any trade that you're doing, you're going to be trend or counter trend. So a lot of times, if you're in crypto and you're trading on an exchange that only allows you to go long, then you're always going to be in a long trend trade, because you can't counter trend. Well, you can counter trend in a downtrend, but understanding that is understand. So if the way to look at it is that when you're capturing this in your trade journal, if the instrument that you're trading is trading below moving averages, it's clear that it's a bear bias, it's trading in a downtrend, and then you're entering to go long, well, you're counter trend trading there. You're not trading with the direction of the market. So you want to understand that. So a lot of times, I'll share in Forex, I'm more successful at counter trend trading and scalp trading than I am in swing trading. So I'm able to time tops and bottoms in the Forex market very successfully for scalps, not so much for swings. So I only learned that and really saw that through detailed journaling and saying that this is a counter trend scalp, and that it was basically just playing the ranges, but then I saw it clearly on all my outcomes by actually saying, look, the bias was bull and I was shorting the market and I was a counter trend trade. So I saw that most of those trades for me were winning trades. And then I just dove in and figured out a system and then traded that. And it's part of my trade system now. It's one of the essential ways that I actually scalp the Forex market. The next thing you want to capture is chart patterns. So when you're doing your trade journal, what chart patterns did you see? What chart patterns are unfolded for you? What chart patterns did you trade off of? Or what chart patterns did you ignore? So we cover that in detail in the training. So you'll definitely want to see, I see a head and shoulders, or I saw a clear head and shoulders, or I saw a head and shoulders on the daily. Just capturing chart patterns, capturing everything, because you might notice, once again, this is about journaling, and it's about really capturing your edge on the market. The next thing you want to cover is the charting system story. Now that's a garbled, not sentence, but 3 words that basically says, if you're using something like Fibonacci, if you're in this training, you're using value channels most likely, then you want to be able to tell the story of what the Fibonacci or the value channel tells you. And that's when you can tell a story of price action, you're reading price correctly, because you're using a charting system and saying, well, it broke the value channel. I got confirmation on the 15-minute, on the 5-minute, and the 1 hour. That was a confirmation of strength of the value channel. It's been tested twice. And then it reached the 50% mark the previous day, and that was rejected. Being able to tell the system, your charting system, whatever you're using, and the story of that in your trade system will help you visualize that trade and will help you see, well, maybe I have to wait for more confirmation. I'm saying maybe because a lot of times you don't know, but being able to capture the actual story of that, and how, this is another important thing, how you read the story of that price action at that given time. And then you might notice, you might go back in a couple days. Remember, trade journals you go back to. And you might say, what was I thinking? How did I read it that way? This is so obvious. And that will be your aha moment. See, one of the biggest thing with trade journals is that you're always getting aha moments. That's one of the frustrating thing about trading, is that I see this a lot with Twitter type of people, where they're always claiming they're great, but I never feel great at trading. I'm still, I'm pretty successful. I can reliably and successfully pull capital from the market, but I have an aha moment every single day. And that comes from journaling. That comes from learning. There's times I learn something new every single day where I'm like, why did I not know that a year ago? How could I have not seen that a year ago? That's one of the frustrating and great things about trading, to be upfront. But your journaling will help you reveal that for you. So telling the charting system story is key. Time frame analysis. So this is a big thing. Once again, this sounds like a lot, but you're going through a list and you're doing it really quick. I can look at any chart, and you'll get to this point if you're not there now, which is basically I could look at the 1 day, the 1 week, the 1 month, the 4 hour, the 1 hour, the 2 hour, the 15-minute, and the 5-minute, and I can tell you what they tell me based on value channels, what the moving averages are doing, price action, volume, and I can run down a time frame analysis, and I can say, well, basically on every time frame, there's a clear bull sign here, clear uptrend, clear buyers, or the 4 hour is showing weakness, but the 1 hour is showing strength. The 15-minute is showing indecision. So doing a time frame analysis that you can go back to is it's one of the things you want to capture in your trade journal. As we continue on the trade details, moving averages. So you want to, just like See, this is why a trade journal is so great, because it's when you keep a trade journal, you're holding yourself accountable to your trade system. So when I first started trading, I thought I had a trade system and I thought I was looking at everything. But until I really started journaling, I realized I wasn't looking at everything. And one of those things that is, I think, critical is moving averages and understanding the truth about moving averages and how they relate to price action and how they shouldn't be used as a trade system themselves, but they should be used to reveal price and the strength of price and the behaviors of the market participants. Well, in my journaling, until I started going down the list and saying, what do the moving averages tell me? I realized while I saw them on the chart, I didn't really see them. I don't know if that's the right way to say that. So it's like you see me, but you don't see me. So I saw them there, but I wasn't digesting them. I didn't slow down to actually really digest them and really understand them. I did when I started journaling and started saying, okay, moving averages, and then going down the list and saying, okay, here's what the 200 tells me. Here's what the 12 tells me. Here's what the 17 tells me. And then just going down my moving averages. So that's something you want to capture. Indicators. So if you use any indicators, you know me, I do believe in a few indicators, but not really. I think that any trading can be done on pretty much naked charts with just moving averages and value channels, and then just understanding, being able to read price correctly. But if you use an indicator, you want to capture that. So if you use the RSI, you want to then capture what does the RSI tell you on multiple time frames or the time frame you're trading. Is there divergence? Is there not divergence? What would you like to see? What concerns you? So any indicator that you use, then you want to capture your thinking, your thoughts, and how that played a role in your trading. The price action story. Notice I use the word story a lot, because if you can tell a story of a chart, you've digested what has happened. If you can tell the story of the interaction between buyers and sellers and how they got there and the strength that they got there, you're digesting the market at a visceral level. So a lot of times in my trade journal, what I'll cover is a price action story. And it will read like an announcer for a sports broadcaster, where basically the buyers took control of the market 2 days ago, but then the sellers shut it down after a day and a half and shut it down pretty fiercely. But then the buyers stepped in and it got really volatile and volume doubled. So the amount of buyers, the amount of market participants doubled. And it doubled in such a way that eventually they beat down the sellers, and the sellers completely capitulated. And in the UK session, the London session, it was obvious that the sellers had ran out. And from there, buyers have been in control of the market. So see, I told you didn't see a chart. There's no chart in front of you, but I could tell that story by looking at a chart. So being able to tell the price action story and having that in your trade journal, because the other thing that you can do is you can go back to that price action story and then you can look at it and you can say, well, I actually read it right. And it actually played out the way I thought it did. And that played into the strength of a continued upside. Or you might look at it and say, well, I read it wrong. So maybe I'm reading price action wrong. So how do I then adjust my trade system so that I'm reading it correctly? So the next one is risk reward analysis. So in every trade, you should already have a risk reward system in place. So you want to capture why you chose your risk reward. Usually that's already set in stone. Usually you already say I'm going to lose, or I have the ability to trade and risk up to 5% of my trading capital. So here's my risk reward analysis. Where you might change this and where this might deviate in your trade journal is you might say something, my confidence in this trade wasn't high, but I want to participate. It wasn't as high as I would like it, but I wanted to participate. because I'm following my trade system. So I reduced my position size and I reduced my stop loss. So I reduced my risk on two sides. So that would be where you would do that. And you might notice that maybe you did that and ultimately you got stopped out. But ultimately, if you would have followed your normal risk reward strategy, you would have done well. So being able to trade journal that out and understand that is good. You want to capture why you picked your entry. So all the things that went into you picking your entry. And it's usually value channels. It's usually price action. So you want that in your trade journal, why you picked your entry. Why you picked your exit target. You might say, well, it's below a inflection point that was previously respected. You might say it was below the 50 moving average. It was below a market structure. And I wanted to get out before everybody else got out. So capturing why you picked your exit strategy and why it makes sense or why it doesn't make sense. The other thing that you can do that I do a lot is a lot of times I don't have an exit target because I just want to be long in something. And I want to be as long as the market tells me that there's a bull uptrend. A lot of times this is when we've seen a very fierce decline in the market. And there, to me, it feels like there is room for an upside. And I want to be in that trade for as long as possible. So what I'll do instead of picking my target exits is I'll pick a price analysis target on both an upside and a downside. So what that means is basically I'll say, well, let's say you bought something at 100. I'd pick 102 and I'd pick 98. And I'd put an alert there. And when the price got there, then I would do my trade journaling and I do my technical analysis. Do I want to stay in the trade and everything else? But so I wouldn't pick an exit target. I would pick price targets. So on both the upside and downside, because you don't know. Now, if it didn't hit either one of those targets, you want to pick a time target. So usually a day, whatever the trade, whatever type of trade you're doing, you want to check in on that trade. And if it's just moved sideways, you still want to make that assessment. The other thing you want to capture in your trade journal is the reason why you picked your stop loss location. So this is, usually it's below support, below this value channel line. You want, if you've gone through the stop loss training, there's rules for picking your stop loss. So it's average true range, it's below value channel, below support, not where liquidity can be found, all those things that we cover in the stop loss training. You want to capture all the reasons that did play a role in you actually doing your stop loss. So this is a hidden question that you should ask or answer in your trade journal, which is what trade of the day, week, or month is this? And I mentioned before where my first trade of the day, often I was wrong. And I don't know if I just was itching for action. That doesn't sound like me, but maybe that's why I read the market wrong on my first trade of the day, or maybe I just wasn't in sync with the market. So if you notice every third trade that you do, you're wrong. Well, the only way you're going to really realize that is if you actually capture it. So you want to, in your trade journal, you want to capture what trade of the day was that? What trade of the week or month is this? And the other thing to keep in mind when you're doing that is the health of the other trades. This is a big thing. This is something that isn't captured in enough trade journals that actually is a detriment to a lot of traders, which is, imagine you did 4 or 5 trades today and you set your stop losses and every trade you did went against you within the first hour. So none of them went in your direction. So basically your entries were bad. And while it's still within your deviance of stop losses, every entry you did, and you're following your trade system, every entry you did, you're in the red. Wouldn't that affect your next trade? Wouldn't you be a little bit more skittish? Would you follow your trade system? A lot of people won't still continue to follow their trade system. Now, that might be a good sign because that might mean that something's changed in the market and maybe you need to adjust your trade system. But oftentimes, and this happens a lot, is that those health of those other trades, each trade is its own individual bucket. Doesn't matter what the previous trade happened before, as long as it's a different instrument, each trade is its own individual bucket. So what happened in another trade has no effect, as long as you're following your trade system, has no effect on the trade you're doing right now. But because we're human and we have emotions and we remember those things, they do have an effect. So capturing what trade this was and the state of your other trades will help you maybe see a trend. And a lot of times, I know traders that if they go on a hot streak and they do very well for like a week, they might take the next couple days of the next week off. I know a trader, very successful trader, when he actually does very well, he actually stops trading. Just cold turkey, just stops. And because he's learned through his journaling and through his trading that when he was doing very well and just got to an overconfidence level where he felt like he was reading the market so well, the first kind of loss that he took where he didn't read the market well, he'd just stop, cold turkey, and sometimes even close all his positions out and just walk away for a couple days. Takes a lot of discipline, but he learned that through journaling and realizing that there's something that clicks in him, that he becomes an overconfident machine when he starts winning and winning and winning, and then it needs to be cooled down. So, just being able to recognize that is key. The other thing that you want to capture in your trade journal is how long have you been watching the instrument? And what I mean by that is let's say I'm trading something and I've been watching it all day. You want to capture that in your trade journal because that's going to, if you watch something move all day and you haven't entered it because it hasn't hit a setup that you're looking for. This happened, I'm sure you traded something, you watched something move and you thought, well, it's not going to go down, or I'll wait till it retraces, or I'll wait till it goes up, and you don't buy, and then suddenly it moves. And then you don't buy because you think it's too high, and then it keeps going up, and then you don't buy, and then it keeps going up, and then you think, okay, well, it's probably going to keep moving. You buy. You've been watching that for the last hour and a half, 2 hours just move, and then suddenly when you bought it went against you. Capturing that in your trade journal is critical. How long have you been watching the thing? Maybe, this is the other thing, a lot of people for trading, they have to watch something for a while. They have to get a feel of how it's trading before they want to reclassify their technical analysis. Some people, like me, I usually can pull up a chart and I have a gut feel right away whether or not I want to look further, or whether or not I need to watch the instrument further, or whether or not I need to look deeper into my value channels, look deeper into price action. I just have a gut feel right away. So the longer I watch a chart, typically I'm not going to trade it. It's typically how I react. And I got that through my journaling as well. What was the overall convincing factor to do the trade? So usually there's a lot of factors for you to do a trade, but a lot of times you can identify one convincing factor. And that could be, so today I did a trade, for instance, and it had moved 50% in the last couple days, and it was on its retrace, and it was retracing to 3 or 4 months. There was an open and close on the daily, and it rejected that. And then it was going to double bottom on that point, and it rejected above that double bottom. Well, that was my convincing factor to do that trade. It was well within my value channel. It was rejecting the value channel. Looked like there was buyers stepping up, looked like there was still people interested, continued to be a bull uptrend overall. Bitcoin was stable. But my overall convincing factor, I could say, for that trade was that it respected the May open and close of those days, and it was using it as support. So that was a good trade. I put a tighter stop loss than I usually would have, because basically I wanted to get to break even as quick as possible in case it was just a minor bounce and then it was going to go back down and break down. But that was my convincing factor for doing that trade. All my other things that I have in my trade system were there, but then that I identified as, okay, that's a pretty good convincing factor in conjunction with everything else. The next thing you want to do is you want to schedule a trade checkup. Now, what I suggest for this, and this is going to go beyond just a trade journal, but you should have a time-based checkup, which is every trade you do, you should at least put a time on, I'm going to check on this in a day, or I'm going to check on this in 4 hours. And a lot of times it's not healthy to just sit there unless you're scalping. There's no reason, if you've developed a proper trade system and you're trading off what I teach in my training, there's no reason for you to actually sit there and watch it. You put the trade on, you followed your system. So you don't have to sit there and watch it unfold. And anything that's going to unfold, unless you're still learning the market, then it's helpful. But other than that, put a time on it. The other thing that you can do is you can do a price-based. So schedule a checkout and say, well, this price and this price. And you want to do both on the upside and downside. Now, on an active trade, so in your trade journal, what should you answer on an active trade? So this is a trade you've got going on. You've already journaled it so far. Now what are you going to capture on an active trade? Well, screenshots. You want to capture screenshots when you check in. So if you've created a time-based check-in, then you want to actually capture that. If you created a price base, well, you want to then capture that as well. So capture where the price is at and how maybe it got to the price within 2 hours. Well, then you're doing a checkup within 2 hours, and then you're doing an analysis. Once again, in an active trade, what is unfolded? The story of the chart. So you want to capture that again in your trade journal. You want to capture what happened from the time that you entered the trade to your checkup. What's the story of the chart? Binary decisions and route. This is a secret, I'd say, to trading. That if you want to be, remember I said journaling is the quickest way to grow as a trader. The other way to make sure that you're using your time highly effectively as a trader is to get to binary decisions. And in the training where I cover binary decisions and the route to making binary decisions, that training is, you should, if you haven't watched that, you haven't gone through that, that is a secret to trading, which is getting all of your decisions to binary decisions and having a process to get to binary decisions. That way you don't waffle at all. That way you don't waste time at all. Time is money. Being able to make trading decisions quick, spur the moment based on your technical analysis, everything that you have in your journal and everything else comes down to a binary decision. And the route process to get there is the key. So binary decisions, you want to capture your binary decision and how you got there. So that's usually when you're about to enter a trade, it's not a binary decision because you're following your trade system. But when you're in a trade, you need to be making binary decisions as quick as possible. So definitely, if you haven't not watched that video, that training video, you'll want to watch that. You want to game plan price action and your reaction. And for that, I'm going to mention another secret. And if you're not thinking this way about the market, then now's the time to digest this. And I know it's very simple, but price, that's underlined, price. I didn't say the market. Price can only do three things. I did not say the market. I did not say the chart. I did not say anything else. Price. And let me slow down. I'm going to deviate a little bit off of this just so I can cover this point, because I know I cover this in other videos, but I'll just, if you haven't watched those videos, price can only do three things. If you're going to buy something, you're going to pay the price. You're not going to pay the support. You're not going to pay the moving average. You're going to pay the price. So when I say game plan price action and your reaction, there is no reason why you can't get to a binary decision when you're in a trade and look at it and game plan the only three options that are available to you. Because price can only do three things. It can only go up, it can only go down, or it can only stay the same. It can only do three things. Now, it's messy between those three things. I get it. It can get very messy. How fast it goes up, how fast it goes down. If it stays the same, did it go up 30% in 1 hour and then come down 28% in 1 hour? How price gets there is a factor. The volume, support and resistance, all the other things. I get that. That's all messy. But if you break it down to the bare minimum, price can only do three things. So, if we know that, if we know price can only do three things, why can you not, when you're looking at an active trade and coming to a binary decision, make a decision and make a plan, I should say, and what your action would be on three things? It's not an unlimited number of things. It's three things. So, yeah, I will say, let's say if price goes up, then here's what I would do. Here's what I would look for. Here's my game plan. Now, of course, the velocity of that price and everything else all plays a role. But when you are in an active trade, and you're looking to make binary decisions, price can only do three things. So if you're ever waffling in a trade or not sure what to do or unsure or kind of worried or skittish or emotional, there's only three things that can happen. There's not a whole world of things. So then understanding, and this is why when you're in an active trade, you want to journal. So this is how this correlates to your journal, which is basically, this is where you become a pro. Is that when you're in an active trade, you're emotional, your capital is on the line. In some way, your ego is on the line. Even though you might try to get your ego out, it's on the line. Your ability to then, in an active trade, make a binary decision and follow a game plan that you developed and project out where price will be from where you're at in that active trade and take yourself and your capital out of the trade, all the risk of loss, the risk of wins, and take that out of the trade and make an analysis of a price action, of how price will move and your reaction to that, and whether or not you will follow that reaction and whether or not you're right, will help you become a pro quicker, a professional trader. Because what this will do is that, especially if you're journaling this, you will be able to go back and say, I'm getting good at reading the market. Or what happens with a lot of people is that they game plan the three things price can do, and they're drastically wrong on all three of them. So they'll say if price goes up here, I anticipate price will go up in 4 hours and will be at this level. Or I anticipate, it looks like, based on what I see right now in this active trade, we're going to stay sideways in this range. We're going to trade in this range. Maybe a 1% move up. But basically, it's going to be flat. Or I see a retracement. And if I see a retracement here, it's not going to hit my stop loss. But that actually means that I probably should get out of this trade. And maybe I should get out of this trade now. But what I'll do is I'll wait 2 hours. And if price hits this and then breaks down from here, and it does it in a heavy volume way, where it's clear that both buyers and sellers are participating, but sellers are winning, then I'm going to get out before my stop loss. But journaling that and being able to game plan that is critical. You want to capture that in your trade journal. Want to capture your trade plan. And I know this sounds like you're probably in this video and we're an hour long and probably like, dude, this is serious. And it is. It's to be a good trader, I will say this, as you go forward, journaling becomes a lot easier. You develop a trade system, and your trade system, you start writing in shorthand, and that shorthand you start to recognize, and you start to see things. And then you actually, this is another surprising thing for me, when I started really getting serious about journaling, my equity curve drastically started going up. My trades were better, but also I was getting out of trades a lot more quicker. I was taking profit quicker, and sometimes I was getting an exit. I was taking an exit on a loss. I wasn't waiting for my stop loss. And it's because I was getting better and better and better, and reading the market and understanding the market and adjusting my trade system. But that was only possible through this very focused trade journaling aspect, to following all these questions that I'm sharing here, and the process that I shared here. So let's talk about a completed trade. So we'll move on here. So you journaled your active trade. Now let's say you have a completed trade. Well, of course, you want to track the outcome. So was it a green or red trade? However you traded, win or loss, however you want to think about it. So what was the outcome? Another important thing is grade your trade, A through F. How good of a trade was this? And I mentioned this in the previous video. If you were to hire yourself as a trader and you developed a trade system for your trader to follow, how would that person do? So if you were to hire yourself as a trader and you followed your trade system, you didn't get emotional, you didn't check on your trade every 5 minutes, you followed, moved up your stop loss, you actually were patient with a winning trade, maybe that's a B+. Maybe you checked the trade way too often, you actually moved up your stop loss, and then you got stopped out. But you shouldn't have moved up your stop loss to a profit. You should have moved it up to a break even, because that was following your trade system, but you were concerned about losing capital and you weren't following your trade system. You might grade that a D. There could be a lot of different factors. What you want to do is grade your overall trade. How did you do? And be honest with yourself. This isn't to pat yourself on the back. Oh, I made money. That's an A. I shared this a while ago in the Discord group once. I had a day where I made money, but I was pissed. I was mad at myself. I gave myself basically an F, because I made money, but I made money in very haphazard ways. And I don't know what I was doing. I knew what I was doing. I was trading weird. And the trades, while they worked out, maybe I saw something, I don't know. I didn't feel like I was following my trade system. So while I made money, if you were to grade that on, did you make money? Yeah. The challenge is it wasn't repeatable. I knew what I was doing was not repeatable. So I had no choice but to grade myself an F and actually take a day off and just say, look, I made money. That's great. But it's not repeatable. It's kind of like if you're, I don't know, if you're going to do something crazy like jump a cliff or something, and you did it on a whim. I don't know what you were thinking. You just jumped this big chasm and you made it. Well, and you barely made it. Is it smart to do it again? Is it really smart, or do you want to tempt fate? I'm not saying that it's like that, but really you want to be honest and grade your trades. So grade not the outcome, but grade how you followed your system. And that's really the key. The other question you want to ask, did you follow your system? So a lot of times you have a system that you developed, and then in the heat of the trade, you don't follow it. This is a good example where you develop a trade system and you're using value channels to enter, and it's breaking through value channels. You're getting confirmation, but then it pulls back and it looks like it's going to lose a ton of value, but it didn't break the value channel yet. So then I did this a lot, and then I would sell, but it didn't confirm that it broke a value channel, a key support area, and it bounced off that value channel and continued back up. I didn't follow my system. I didn't wait for a confirmation of the break of the next value channel line to stay in that trade. So I should have stayed in the trade. So part of it is, did you follow your system? Did you not? If you didn't follow your system, you want to note that. And then you might find that, well, I'm not following my system because my system's flawed, and you need to adjust your system. Remember, trading isn't like a set in stone thing. That's the other frustrating thing about trading. It's always adjusting. It's actually one of the great things about trading too. The other thing you want to do is, what did you capture that was right? So in every trade, you did something right. Maybe it was taking an exit at a loss. Maybe it was taking an exit early. Maybe it was your entry. Maybe it was your stop loss. Maybe it was reading the market. Whatever it is, what did you do that was right? You want to capture that. What did you do that was wrong? And just about every trade, you can look at something and say you did something wrong. For me, I can share one of the things that, this is going to sound positive but negative. On trades that I had high conviction of, I wasn't adding to them and going in at scale. And a lot of times I was just trading the same trade size on various trades, but all trades aren't usually created equal. So I noticed in my trade journaling that I had high conviction on a lot of these trades. And what I wasn't doing wrong is I wasn't scaling up my position. I wasn't scaling into a position as I was continuing to be right. So what I would do, and I'll just share the example, let's say I was doing 5 trades a day and 2 of them were winning. I had the opportunity at various times in those winning trades, because I was right, to actually add to those trades and scale in at a little bit larger size and continue to ride it in the direction. And the other trades were not working out as well. But instead of scaling in and taking that capital to those trades that were doing well, I traded other things. Well, while that might be following a trade system, if I have something that's working out and I have the ability to make the same capital but just scale in at a larger, plus I have profit already in, so I'm limiting my risk a little bit. That's something that I felt in my trade system I was doing wrong. So I adjusted that, and I only adjusted that by capturing it in my journal. So, and a lot of times though, wrong is more wrong, which is basically I put the wrong stop loss, or I entered way too early. I saw it move, I saw it pull back, and I thought there was support, and I didn't wait for confirmation of support. I should have waited for a double bottom or something like that. So a lot of times your wrong is definitely a wrong thing. How do you feel? So really look at the trade overall. This is one of those things that isn't often talked about. Do you feel good about it? I shared already that I did a series of trades that I did not feel good. I made money. I just didn't feel good. So I kind of felt sick. I knew in my gut it wasn't sustainable. So if you do that in trades, maybe that's an opportunity though to say, well, maybe that's maybe I should move towards that. Maybe I should find a way to overcome that feeling. For me, I just wasn't the way I like to trade. So capturing how you feel about a trade, and whether or not, a lot of times, this is another surprising thing that I see new traders, they won't feel good about a trade, but then they'll be good trades. And then at the end of the trade, they won't feel good about it. They didn't feel good. It didn't feel like a good trade, but it was a great outcome. So they start seeing a trend. It's like, it's weird. The trades that I don't feel good about are working out, but the trades that I'm like, I look at and like are awesome, they explode in my face. So understanding that and understanding how you feel and tracking that back will help you come to the things that maybe you see in your trade system that you need to adjust, or that you need to start figuring out how to deal with, I should say. The other thing that's important is, on a completed trade, there's always going to be learning opportunities. You need to put down what needs to be adjusted. Now, this is usually in your trading journal. Usually you're going to say, and that might be your number one thing. And that would be, usually it's adjusted, but the one question you want to ask in every trade is, did it involve your daily or weekly number one thing, and grade separately on that? So in the previous video, I shared that you need to have a number one thing that you work on every day and every week and every month. And typically on every trade you're doing, that your number one thing is going to be in that. So maybe your number one thing is, I need to work on my entries better. I need to work on confirmation for my entries. And that's your number one thing. Well, in your trade outcome, you want to mention, did this involve my number one thing? And then grade separately on that. So you're grading your overall trade, and then you're grading your number one thing on that individual trade. So my entry on this individual trade, which was my number one thing to work on today, was a B+. I waited for confirmation. I was patient. I waited for the first 2 green candles, and I entered right above a value channel. Great. I followed. I worked on my number one thing, and I give it a B+. Or maybe you entered, and then it went against you 5%, but then ultimately the trade worked out. Well, I'll give myself a C- or a D, because I misread the chart, and I should have just I should have worked on my entry better, or maybe scaled into the position. And so you're grading your number one thing if the trade had involved that, and it's separate. Most of the times that will be the case. Most of the times when you're grading, when you're doing a trade, your number one thing that you're identifying on a daily basis usually is kind of a fundamental thing to your trading system. And then your weekly and your monthly, as I mentioned before, are overall growth developed type of strategies for your trading. Those, not every trade is going to have that. So for instance, if your number one monthly thing is, I want to have patience with my winners, which is a big challenge that all traders have, then, or I'd say most traders, then what you would say is, well, maybe this trade you actually just took a loss, but you got out early. Well, it didn't involve your number one monthly thing, because it wasn't a winner, so you didn't have to be patient, so you didn't need to grade it. But you should note that, and just at least have it in your trade journal, just so it's clear. So that's what you're doing on your weekly and your monthly and your daily number one thing is you're noting that in your trade journal. So that really concludes the top questions I would suggest you should have in your trade journal and your trading journal. And the next video in this training series, I will share live examples of my trade journal, trading journals. I'll also share solutions to trade journals, and I'll share, so I have a way that I do it. I'll share that. The other thing that I'll share with you is solutions to doing a trade journal that I don't necessarily use, but that I know people in my training have used and other traders that I use. So what I'm really working to get towards, or trying to help you with, is that now that you have the foundation of the trade journal, you understand what it is, the value of it, some questions that you need to incorporate in it. Now, I'll share examples so you can really design a trade system that's unique to you based on live examples of how to do it, how it works, what it looks like. And you can kind of pick and choose the best of what you like in seeing these live examples. So that's what will be in the next video.